Hello, everybody. Welcome to today's webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Today, we are very excited to be doing this topic, which is titled Trading Method, Ichimoku. So welcome, everybody. This is Senkou. I'm the moderator for this session. Now, Ichimoku is a cloud trading strategy. But the name suggests you would know that this is invented by the Japanese. So it was mainly used to determine the support and resistance, as well as to find the momentum and determine the trend direction. Today, we are going to look into this trading method, Ichimoku, which is a Japanese trading strategy. And our Tuan Haji Zainal, our honorable guest, Tuan Haji Zainal, who is the principal consultant of the MSTA program, will walk us through how do we use Ichimoku to find trading opportunities in the market. Now, disclaimer, whatever you share in this session is only for educational purpose. In no way that we give you any recommendation to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risk. Now, allow me to briefly introduce our honorable guest today, and he is none other than Mr. Haji Zainal Arifin. Now, Tuan Haji Zainal is a certified technical analyst, certified financial technician. He is also a full member of the International Federation of Technical Analysts, IFTA, a full member of the United Kingdom Society of Technical Analysts, UKSTA, a full member of the Malaysian Association of Technical Analysts, MATA. He currently serves as the Senior Vice President of Inter-Pacific Securities. He is also the Pengurusi Koperasi Remiser Bumi Putra Berhad, Principal Consultant of MSTA Preparatory Course. So without further ado, let's invite Tuan Haji Zainal to our webinar today.
Yes.
Hello.
Yes, thank you,
Hi,
thank you, Mr. Shane. Can you
Yes,
hear
good to
me?
see you here again. Yeah, I can hear you.
Yeah, okay,
Loud and
good,
clear.
thank you. Yes, thank you, Shane, thank you very much. Okay, Assalamualaikum warahmatullahi wabarakatuh, and very good evening to all of you today. Today, I'm going to share with you the technique that is not really rare. I think a lot of people also have learned about this, and it is a very, very good technique. So bear with me, and then let's see how that you can use this technique for your trading purposes, whether it is a short term or long term. You can use this as long term or swing trade, and also you can use it also for the short term. Okay, first of all, thank you very much, Shane. Thank you very much to LifeChamp to have today's webinar. And also thank you very much to Bursa Malaysia, that is our sponsor. And also thank you for to invite me, well, of your invitation for me to become a speaker. Okay, let me share the screen. I wait. Can I? Okay, can you see my screen, Shane?
Yes, perfect.
Yes. Okay. Thank you. All right. This is okay. Ichimoku Kinkoyu. Okay. What is it? Okay. What is it? Is it a lot of people, or a lot of some people say it is a indicator, but actually Ichimoku Kinkoyu is not indicator. It is a charting technique. What does it mean by charting technique? For example, like bar chart is a charting technique. Candlestick also a charting technique. A line chart is a line charting technique also, or is some more that is more advanced. For example, like the Heikin Ashi that I share with all of you a few weeks ago. And like Renko, like Kagi, all of this is basically is what we call charting techniques. So Ichimoku Kinkoyu also is a charting technique, and it is not a indicator. What is example of indicators? For example, indicators is for example like RSI or MACD or this stochastic. That is what we call as a indicator. But Ichimoku is a charting technique. Okay, let's see. Ichimoku Kinkoyu. Okay, the sound like Japanese. Is it Japanese? Yes, it is from Japan. Okay. Well, that's more than 20 years before it was released to the public. So it was really tested and it was released later, much later. After they tested for 20 years, only was released to the public. And the meaning of Ichimoku Kinkoyu is that the equilibrium at glance. The equilibrium at glance. Okay, let's see. Okay. And then okay. So, what does it mean? It means that you should take no more than a glance to decide if the chart is bullish or bearish. When we look at the chart, what are we looking for? The first thing that we have to look is a trend. You have to look at the trend. And then next one is that the support and resistance. Okay, now we establish a trend. We look at what is support and resistance. What's the third one? The third one, yes, it is a signal. See? So it's signal. So they're saying there are two types of signal: buy signal and sell signal. So basically, that is what we're looking at the chart, and that is what the function or what is the purpose of the indicators and all that. What you're looking for, that is the trend, support and resistance, or what we call also, some people said overbought and oversold, and also the signal that is a buy and sell. So the beauty of this Ichimoku Kinkoyu is that all of these components are inside the charts. That is the beauty of this Ichimoku Kinkoyu, which means that you just look at the glance and you can see everything. Trend, support and resistance, and also the signal. That is the beauty of that is Ichimoku Kinkoyu. So what is the advantages of this Ichimoku Kinkoyu? One is that Ichimoku is defined, clearly defined, the support and resistance. It identifies the trend, the direction, and also it gauges the momentum and provide trading signal. What's the meaning of trading signal? It is a buy and sell signal. Next one. It is the only system with a built-in forward-looking indicator. Looking at Ichimoku chart on multiple time frame can offer a tell-all X-ray into the dynamic of any market. You see the difference between this Ichimoku and some other chart types is that using the Ichimoku, you can see or you can look forward, whereby there is no other charting technique that you can see forward. Most of it is just trend following, or we can see of the past. But this Ichimoku, they show you the forward. We see later how is it. Okay. And it shows how to correctly time their entry and exit trade. Okay. Most of charting platforms today offer Ichimoku as an indicator. Which means that you can use it because it is widely available. For example, this trading views and that they have this Ichimoku. So you have to calculate or have to you need to put some extra things that that is already available as an indicator, even though it's not indicator. Okay. Ichimoku Kinkoyu was developed by a Japanese newspaperman or a reporter. He's a reporter in one of the newspaper in Japan, and he's an economic reporter. His name is Goichi Hasoda. So this is his name, and he began developing this system before World War II, and he gets a lot of students, to do or to test his program or to test this Ichimoku, and he tested for 20 years, and then only that he published it to the public. So it was published in 1968 in Japan. So Ichimoku Kinkoyu was tested for 20 years, so it is very reliable. Okay, and it's only popular in western side in the 90s. In the 90s only it is popular in the in the western, or even in Malaysia also is in the 90s, when we have all of these Japanese traders, and we have the computers and all that. So his pen name of this Ichimoku is Ichimoku Sanjin, which means that a glance on the mountain man. What does it mean? It means that, like as though as he's standing at the top of the mountain and look down, so which one you can see very much clear. You can see all the everything you can see just at one glance, because you are at the top. Okay, so the Ichimoku Kinkoyu is the equilibrium at a glance. Okay, so Goichi Hosoda believed that the market was direct reflection of human group dynamics behavior. So which means that, as usual, we also a technical analyst, like I myself, technical analyst, also we believe that why the chart behave certain behavior, because of the human behavior. So he felt that human behavior could be described in terms of a constant cyclical movement both away from and back towards equilibrium in their life interaction. So sometimes what you can say, we believe like this, that the market can be extreme, see, but it always come back to the equilibrium, always go back to the equilibrium. It is the same thing also, for example, like indicators, which mean that it can be overbought, it can go to oversold, but you always go back to the middle, or it's in the equilibrium. Okay, so there are 5 components in the Ichimoku, and it provides its own reflection of this equilibrium or balance. Okay. So these are the lines. So these are the components of the Ichimoku chart. There are 5 separate indicator lines. This line works together to form the complete Ichimoku picture. So let me learn how to construct first, even though you don't need to construct it because we use a computer, but at least that you know what is this line, how this is constructed, and where it come from. Okay, so there are 5 lines: Tankan San, Kijun San, Chikou Span A, Chikou Span, Senkou Span A, Senkou Span B. So there are total 5 lines of total for this Ichimoku Kinkoyu. Okay, or in the English name, they call it as Tankan San, they call it turning line. The Kijun San, we call it standard line. Chikou Span, we call it a lagging line. And Senkou Span A is a first leading line, and Senkou Span B is a second leading line. So the formula is that this is a formula how to calculate, but you don't have to calculate for it because it's all by using the computers. Unless you want to tweak it, or you want to change the formula, or you want to enhance the formula, that's different. You need to know the formula, and then you have to do some what we call some modifications. Okay, these are the Ichimoku Kinkoyu. If you look closely, that is this is today's price. For example, this is today's price. And there is a line here that it tell you, or this is the same, almost is the same, which means that this line, this green line, actually is the chart, or it is a close price of this price action. So basically, this candlestick that you see is the same of this green line, but it is drawn 26 days, 26 days behind, or 26 days backward. And the next one you can see here, there's a, we call it cloud. You see, it's a cloud in the green one, the cloud, and up to the end, it is 26 days ahead. So total is 52 days. 52 days. So the question is that why is 52 days? Okay, why 52 days? Why is 26 days? Okay, basically is one of the reason is that in Japan, previously, in Japan, they work for 6 days a week. See, so they work for 6 days a week. So this is basically for 26 days. Usually is which means that is 1 month. So which means that they are looking at what is the price or what happened last month and what is going to happen next month. So that is why they have a 26 days backward and 26 days forward. That's the reason. That's why they use this formula for the Ichimoku Kinkoyu. So these are the lines. So the one that we draw 26 days backward, it is what we call a Chikou. And the one that is fast line or faster line, we call it a Tankan because this the blue line. The blue line is what we call a Tankan, and the red line there's a Kijun Sen. And when it is green, the top one is Senkou Span A, and it's supposed to be at the bottom. When it's red, the Senkou Span B at the top, and the Senkou Span A at the bottom. And there is a crossover here, or crisscross, and then also the distance between these two lines, Senkou Span A, Senkou Span B, we call it Kumo in Japan, or we call it cloud in English. There is a lot of we can read, or they can tell you a lot of things that in here. Okay. Next one. Okay, so basically Ichimoku chart is a trend following system with an indicator similar to moving average, but it is more advanced, or it is more features compared to just a moving averages. And what make it unique, however, is found in the strategy time shift, which means that is the time shift of the 26 days backward and the 26 days forward, for the delay line and also for the future. And we can look at market timing, resistance, support, and possibly a false breakout, all in one chart in one panoramic view. That's what we call Ichimoku, which means panoramic view. So what are the line? Okay, the Tenkan-sen line. The first one is, what is Tenkan-sen line? This is a short-term trend line similar to 10-period moving average. See, this is that is the Tenkan-sen line, and it's also known as a trending line, and it is a signal of a region or minor support or resistance. Okay. The Tenkan-sen line also is calculated. How is calculated? That is by taking a midpoint between the highest high and the lowest low over the past 9 period. For example, if we use a 9 days moving average, we use closing price, or we use high, or we use low, or we can use also mean. We can use that. But in this, how to calculate this Tenkan-sen is that they take is that the highest high, the highest high and the lowest low over the past 9 period. So that's different there. That's different calculation. And the next one is the Kijun-sen. Kijun-sen is the red color one, known as the confirmation line. Its component also serve as a signal for support and resistance level. Many traders use this line as a level of a trading stop. See, so this Ichimoku, they have all the components. We have a signal buy and sell, which means that the sell, which means that is either you take profit or as a what we call as a stop. And also the beauty of this that it is you can use it as a trailing stop. Trailing stop means which means that it follow the market. Okay. So it also serves as an indicator of trend. It also serves as an indicator of trend. So which means that whether it is uptrend or downtrend or sideways. Okay. If price is above the Kijun Sen line, then the stock is bullish. So which means that if the price is above the Kijun Sen, it is bullish. And if likewise it is below the Kijun Sen, and then it is bearish. It is a very similar, or it's always similar, like for example, that we use indicator. For example, we use RSI. When RSI is above 50, we call it bullish. When below 50, we call it bearish. So same is the way of we use this Kijun Sen. It's almost similar like use RSI. So which means that if the price is above the Kijun Sen, which means that we say it's a bullish, then it's below it is a bearish. Okay. And also Kijun as a stop loss point. So which means that if it trigger the Kijun Sen or the price cross the Kijun Sen, and then we consider it as a stop loss. Okay, and some of the student of my student, to my MS student also because I'm teaching the MSTA. There is a what we call is a certified technical analyst. And they answer this kind of question. They ask, is the color, is it the color is only green or is it red? Actually, the color you can change. You can change what color that you want. Up to you. It's up to you. You can change the color. You can change the shape of the line. You can make it dotted line, whatever, doesn't matter. But the most important is the calculation and how you will interpret all of this line. Okay, this Kijun Sen, what is the formula? This line is calculated by taking the midpoint between the highest high and the lowest low over the past 26 days period, or 26 and or 26 period. For the Tankan Sen is a 9 days. For this Kijun Sen, it is a 26-day line. So it is a bit lagged. Okay. So that's why they call it a lagging line. That's why you call it as a lagging line. All right, next one. Okay, the next one is a Chikou span line. Okay, the Chikou span, the green color line is a Chikou. Okay. So this line is a current bar closing price plotted. So which means they use the closing price. They plot it 26 days period back or backward. This lagging indicator is often used as a confirmation of signal and can also serve as a support and resistance level. The lagging indicator can also assist a trader in confirming the direction and the strength of the trend. Okay. So this Chikou also is very good because based the Chikou line, so that we know where are we, or where is the price action the last 26 days. So from here, for example, that we know that the last 26 days is higher, now is lower. Okay, so that is how to interpret of this Chikou line. Okay, the next line is a Senkou Span A. That is how to calculate. That is a Tankan Sen plus Kijun Sen divided by 2, time shifted forward into the futures of 26 days period. So that is what we call is Senkou Span A. And same thing also as Senkou Span B. Highest high plus lowest low divided by 2 for 50 weeks price period time shifted towards into the future of 26 period. That's how to calculate the Senkou Span A and Senkou Span B. Okay. So what is a Senkou Span A? The Senkou Span A is this line from one of the boundaries of the cloud. One of the boundaries of the cloud. If the stock is trading above the line, then the line will serve as a major support level. So which means that in this case, for example, that when the index or when this price is above the cloud, so this Senkou Span A act as a support level. If the price below the line, it will serve as level as a major resistance level. For example, it's below this line, you can see that this is as considered as a resistance level. This one is unique in that the result of this calculation are plotted 26 period ahead. So this is, which means that this line is 26 period ahead. So that is a unique. The only I think that is the only one that is this kind of calculation for the charting technique. This means that today's corresponding line was actually plotted 26 days ago. Okay, this line formed the other boundary of the cloud. Okay, Senkou Span B. Okay, this line serves as a second level of support or resistance, and it is calculated by taking the midpoint between the highest high and the lowest low over the past 52 periods. So that is a Senkou Span B. Like the Senkou Span A line, this is also plotted 26 period ahead. This line is similar to a 50% Fibonacci retracement. So that is quite similar if you are very familiar with the Fibonacci, and it's very similar. So the next one is Kumo. What is Kumo? Kumo is the cloud or the distance between the Senkou Span A and Senkou Span B. Okay. The Kumo is also one of the most unique aspects of Ichimoku Kinkoyu, as it provides a deep multi-dimensional view of a support and resistance. So basically, in Ichimoku, the most important is the Kumo or the cloud. If we distinguish the prevailing big picture trend and price relationship to that trend, a better measure of support and resistance. So which means that we can use this as a better measure than support than the resistance. Because why? Usually the support and resistance usually that we draw ourselves. Based on what? Based on previous high, based on previous low, or maybe you can use what to you draw a support resistance. For example, like a Fibonacci, or we can use against angle, or we can use pivot. We can use the pivot. There's a few pivot. There's a pivot for like pivot for the this Fibonacci, Camarilla, and also there's some other a classic pivot also we can use it as a support and resistance. But this Kumo, the resistance and support is determined by the price action itself. Okay, Kumo expand and contract with historical price action to give multi-dimensional view of the support and resistance. So that's the advantage of this Kumo. Kumo depth of thickness, which means that whether how big is the Kumo, is a function of price volatility. Thicker and more well-developed a Kumo is the greater the support or resistance it will provide. So which means that the Kumo is big, so which means that is or big or thicker, which means that it is have a greater support. This is how that we use the Kumo as a support and resistance. When the price action, when the price goes inside the Kumo, the resistance is the top of the Kumo, and the bottom when it goes inside the break inside the Kumo, the top of the Kumo is become resistant, and the bottom of Kumo become the support. So you can see that it's become the support, and this support is not a static support or static resistance. It is become a dynamic support and dynamic resistance. For example, you can see here they hit the resistance, it come down again, and it hit the support and it just go up again. You can see here also is support, and it is also is a resistance here. It break the resistance, and one is the resistance broken. It just the price just go up. You see, so that is where you can see. But remember that this Kumo actually is 26 days ahead. So which means that one is broken actually is that Kumo is happened last 26 days ago, not now. You see. So the Kumo sentiment, this is very important. This is the most important in the Ichimoku, that bullish. If the Senkou Span A is above the Senkou Span B, it is bullish. So very easy. It's a bearish. If Senkou Span B is below, then it's a bearish. Okay. When the Senkou Span A and Senkou Span B switch places, this indicate an overall trend change. So you see that this is very important, or it is something that is the most valuable in this Kumo, whereby when they switch from A at the top to A at the bottom, so you know that there's a change of trend in overall. You can see, for example, here that this is a change of trend. You can see there's a change of trend here. So there is a change of trend, meaning that from the bullish to bearish. So when you can see that it's now, for example, here in here at the top, and it's a bullish, the Senkou Span A at the top, then Senkou Span B at the bottom. But one is a bearish, it's a Senkou Span A at the bottom, Senkou Span B at the top. So there's a change of trend. So it's also, we can see easy using this Ichimoku, Ichimoku. We can see that, okay, we will know when there is a change of trend. So the trading system. So the easiest way to trade using this Kumo or using this Ichimoku is that we use a Kumo. So we just go long if the price above the Kumo, or it is a bullish Kumo, and we go short or we sell when the price below Kumo, or we call it a bearish Kumo. So which means that when we said it's a breakout system, which means that the price action must be above the Kumo, and we sell when the price action is below the Kumo. Remember that this Ichimoku is a trend following, so it is a bit lagging. For example, as you can see here, it break the Kumo, and this is where is our buy signal. So it's our buy signal. So which means that it's already established. It's already the only then that we buy. And those let's see, got any sell signal? Kumo break the signal. Okay. And the sell signal here, for example, in this case, you can see there's a sell signal when it break the Kumo, and the buy signal when the buy is break this signal. So this is where that the buy signal and the sell signal using the Kumo. For example, in this case, that this is a point A, this is point B. The breakout is a point A. The entry also is point A. So which means that is why we use point A, because that is the breaking point, or there's a breakout. So the breakout is point A that you buy here, and the B is point A, and the B actually is the stop loss level. The B is a stop loss level. See, not point C, it's a B, a stop loss level. And also the breakout here is a D, and also it is where that we set at the D. So total here, total number of these bits is about 608 bit, which means that the profit of 53% profit for the period of 146 days. So roughly about half a year. So we enter here, and then for up to this level, their total about 95 bars or 95 days. So which means that if plus a weekend, we get 146 days. Yeah. Next one, Senkou Span A, Senkou Span Cross. Okay, Senkou Span Cross. All right. So strong Senkou Span Cross is that a strong Senkou Span Cross signal takes place when the price curve is on the side of the Kumo that match the sentiment of the Senkou Span Cross. Okay. So they have a strong, neutral, and weak. So the neutral Senkou Span Cross signal is a neutral Senkou Span Cross signal take place when the price curve is inside the Kumo all the time, or at the time of the Senkou Span Cross. Okay, a weak Senkou Span Cross is a weak Senkou Span is that when the price or the place when the price curve is on the opposite side of the Kumo that match the sentiment of the Senkou Span Cross. What does it mean? Okay, it's like this. The cross happen here when the price is above. When the price is above, it is a strong buy signal. It's a strong bullish signal. Is it a strong bullish signal? Remember, it is not here because this is a 26 days ahead. You see, it's 26 days ahead. So which means that this signal was given 26 days ago. You see. Same thing here. I'm very sure that some of you are a bit confused, but then once you are familiar with it, and then you will understand. For example, here like a strong selling signal. For example, here, actually the selling signal is not here. Actually, this signal was triggered 26 days ago. So which means that roughly is somewhere is I think about at the D line. I think somewhere about D line. Yes, that's right, about at D. So which means that the signal is here. See? The price is here and the signal is at C. So which means that they give you the signal here, and when the price is at the D. So it's not already here. So which means it's earlier than on this level. So, and this is what I call a strong signal. Why is it a strong signal? Because this happened when the price is below the Kumo. And for example, in here, in E, whereby that this, when the price is inside the Kumo, and there is a crossover, or there's a change of between the span span A span B, at the E here, which means that it's what we call as a neutral signal. Okay. So, how to use this cloud to trade stocks? Okay. One is that if you are a day trader, you can use this cloud on an intraday basis. You can show a trader where the intraday level of support as an area, as the up, and a day trader can also use the cloud to find the highest probability setup. So which means that if you're a day trader, you cannot follow, you have to anticipate. Okay, there's a difference between a day trader and the swing trader. Okay? Swing trader, they have to, usually we are the follower. Swing trader or long-term trader, we are a follower. But if you are a day trader, you have to anticipate. So by using the cloud, that is much easier for you to do the forecast, especially for the day trader. Okay, next one, the cloud for the swing trade. So using the cloud can help the swing trader avoid trading against trend and can help steer them away from stocks that are in neutral territory. Using the cloud can also point them to stocks that are near breakout point. So swing trade usually is we are talking about a medium term investor. So which means that by using this cloud, that is you can trade, or you can choose the stocks that is very near, or is going to move. So start moving. For the long term trader, using cloud pullback. So which means that for long term, you're holding for long term. Long term means which means that you're holding for more than a year. So you can use the cloud for the pullback. So what kind of stock that we use, or we want to trade for long term? Usually is a blue chips, or dividend bearing stocks. Usually it's blue chip. It's a blue chip. They use blue chip. We use as a long term. So we buy when the cloud pullback. So this is the point of opportunity for you to enter or for you to add your position. Then the long-term trader can use the cloud to determine when it's time to exit position. Since the cloud is forward-looking, the cloud can also give a head up before trend might turn the other way. So, for example, like in this kind of market, you see, if you look at the market now, there are so many stocks. It's become very cheap. It's very cheap, and there's a lot of blue chips stock now become affordable compared to previously. So perhaps you can use this cloud for long-term traders technique for you to choose what stocks to buy. Okay, this for example, the example here is that the point of the cross actually is A. You see, this is A. Is A here? It's not happen at the A, so which means actually it happened at the B, which means that when it's happened at the B, you see that it's happened at the top or at the above the cloud. So it is a strong signal. So the entry point, there's a B is entry point, and the stop loss is at point C. So which means that you can see that is a cloud at the bottom below the cloud, and the Senkou Span cross at point D. And when it's happened here at point D, actually the price is at the point E. At the point D. So the total gain is about 77 cents. For the period of roughly basically about 20% return, about 5 months. From the period here, I think about 97 bars is about 100%, is about 5 months. So I think it's for 5 months, about half a year, we get a 20%. I think it's also quite worthwhile. Okay, next one is the Tankan Sen and the Kijun Sen. Okay, so the Tankan Sen is highest. This is the formula. I just can skip the, and this is Kijun Sen, and also how we use this Tankan Sen and Kijun Sen, especially Kijun Sen, as a support and resistance. It is a bullish if Tenkan Sen is above the Kijun Sen. If Tenkan Sen is above Kijun Sen, and then it's a bullish. So when I teach my students how to remember all this Tenkan Sen, Kijun Sen, all that, you see. So which is which? So we use the Tenkan Sen because I said it's a time. Remember the T is a stand for time, or the Kijun we said kejar. The K stand for kejar. Kejar means chase. So if we kejar means it is at the back, is it? And the time which means as ahead. So we know that the Tenkan Sen is a faster line compared to the Kijun Sen. So if a bullish, if Tenkan Sen is above Kijun Sen, then it's a bullish. Okay. So if it's bearish, then the Tenkan Sen is below the Kijun Sen, and then it is a bearish. Remember just now we use Kumo. Okay. But Kumo sometimes the problem is it's lagging, so it is a bit slow. We can use to make it faster for short-term traders, especially. We can use this Kijun and Tenkan that as a bullish or a bearish, bullish, or to determine whether the price now is bullish or bearish. Okay. Here's an example. This example is way. That is, for example, Kijun Sen and Tenkan Sen. See, as you can see that when the price is the Kijun Sen is flat, so it can be considered, or you can use it as a support line, as a support. It's a support. You can see that there's the price support by the Kijun Sen that you can is flat there. And this is Kijun Sen. You can see it is also can use it as a support. And this is you can see that also this Kijun Sen also can use as a equilibrium. Means that when, for example, when let's say for example the market is sideways. So the market sideways, you can see the price will fluctuate. They fluctuate above and below the Kijun Sen. So we can use this Kijun Sen line as an equilibrium. So that you can see here that the price move up and down of the between the Kijun Sen line. So Tenkan Sen strategy, how to use this strategy. All right. Strong Tenkan Sen or Kijun Sen cross signal. Buy signal when a bullish cross happen above the Kumo. Sell signal when a bearish cross happen below the Kumo. Neutral is when the signal is happen within the Kumo, or sell when a bearish cross happen within the Kumo. This is neutral. Buy or sell if it's happen inside the Kumo, it is neutral. If it's outside of the Kumo, if let's say it's above, it's a bullish. If it's below, it's a bearish, but it's strong. And it is weak when the buy signal is cross happen below the Kumo. So this is how it's important the Kumo. The Kumo will determine. It's above means it's a strong, below means it's a weak. Okay. This for example. This is the neutral side signal. Why? Because it is happen inside the Kumo. You see? And this is strong buy signal because it's happened outside of the Kumo. This is above the Kumo. And this is a weak signal. Why it is a weak signal? Weak side signal because it's happened opposite, which means that the Kumo at the top of Kumo, it is considered as a weak sell signal. If it happen below the Kumo, and it's become a strong sell signal. Okay, this is a case study. For example, a bullish cross point at point A. This is point A. There's a bullish cross here. It's bullish cross. And we entry at the point B because when it cross, it need to be above the Kumo. You can see there's a cross, and then the price above the Kumo. One is a breakout above the Kumo, only there is we trigger the buy signal. And the stop loss is C. It is below the cloud. And it's a bearish cross point B, which means that it's a point B. And this, when we sell, we take action or we do execute when it's below the Kumo. Not below the Kumo. After the cross the line. So the cross the line, so there is a E in E here, and is a total about total gain about 95 bits, and also period about 15 days. This is for the short term. So Kijun Sen cross strategy. Strong Kijun Sen cross signal. Strong, which means that buy or sell signal. Buy signal when bullish cross happen above. So remember, it's still Kumo, which means that it's above the Kumo is a strong. Neutral is inside. When it is inside, it's considered as neutral. And also when it is weak, when it is cross is at the weak signal when it's happened below the Kumo. Okay. For example, like this is a weak signal. Why is weak signal? Because it happened at the above the Kumo. Why this one is neutral? Why is neutral? Because it's happened is the inside the Kumo. See, and the strong signal, you see the strong buy signal. Why? Because it's above the Kumo. So that is why it's the Kumo will determine whether it's inside is the neutral, at the top is a weak if it is a sell signal, but if it's a buy signal at the top, it's become a strong signal. This is another example. This is a bullish crossover point at point A, and then we buy at the point B. It's point B, and price cross at point D. This is point D, the crossover at point D, and we exit at the point D. So this is how that we use this. What we call is a Kumo and the Kijun Sen. So next one, the lagging line, or we call it Chikou. This the line is the purple line here. So this is the current position of Chikou. This is the current position, because it's the same as I said earlier. It's the same, or it's just a duplicate of this current one, but it's drawn 26 days behind, or 26 days backward. So the current location of the Chikou, which means that is above the previous line. So which means that the last 26 days price is below, or now, or we can say this way, that now the price is higher than the price the previous last 26 days price. Okay. And this is bullish, and it is bearish if the price is below. So which means that the current price, this is the current price, last 26 days price 26 days ago is higher than current closing price. This is a bearish signal from the Chikou span. Okay. So in this case, this is support and resistance. You can use also Chikou as you can use it as a support and resistance. So this is how Chikou span here is as a support and as a resistance. So there is among this the usage for this support, this Chikou span. Okay, Chikou span cross. Okay, it is good strong. It is if the cross or the bullish cross take place and current price is above the Kumo. So still you see still Kumo, whether it's above Kumo, inside the Kumo, or below the Kumo. It is inside, it's above, it is strong. If it's inside, it's neutral. It is outside, it is weak. So it is bottom at the lower the Kumo, and it's weak. So buy when the bullish cross take place and current price is above. Sell when the bearish cross take place and current price is below Kumo. Okay, this for example here. So this is a weak signal. Why is a weak signal? Weak sell signal, because it's happened at the top. This is a strong buy signal. Why? Because it is happened at the top of one. When this buy signal is strong at the top, sell signal is weak at the top, but is strong at the bottom. So it's weak sell signal. Why is weak? Because it's above the Kumo. Okay. So it's yes, it's above Kumo. So you got no. If inside is a neutral. Okay. This is another example study. This is a bullish cross point at point A, and then it's a entry at point B2, and then stop loss at the C, because where's the C? No, not C1. So C here. There's somewhere C here. B. Okay. And then the stop loss point is C as 10 bit. Then price cross Chikou span at the point C1. This Chikou point is C1. When the Chikou cross and exit as at the C2. Why is C2? Because this is the current price. Because this is 26 days ago. You see, this is current price. It is a current price. This is 26 days ago. So we cannot sell here because the thing that we draw is the last 26 days ago. Okay. So this is a summary. For the summary is that the Kumo auto span A span B above cloud or below cloud. So it is If above cloud is strong, below cloud is weak. So it's whether it's the Kijun or Tankan cross or Chikou, and to confirm the Kijun and Tankan. So we can use the Kijun and Tankan. We can use the Chikou to confirm the Kijun and the Tankan cross. See? Okay. So another technique that you can use also, since this is also what we call charting technique, so we can use or we can combine it with some other technique. So the another technique that we use usually is that we can use this is a combination of Ichimoku and also Heikin Ashi. So you can use these to combine Heikin Ashi. Instead of using the normal candle, we can use Heikin Ashi for the candle, and as you know, the Heikin Ashi can tell you the direction of the market. So it is I believe it's a very good combination. Or we can use some other thing, some other combination, for example like Renko. But is this I think it's a bit difficult if you want to use, for example, like point and figure, because they have no time, you see, because when you draw a chart, see, there are two elements. We need two elements to draw the chart. There is a price and time. You see, price and time. See, but then for example, when the chart is, or the pattern or the technique, it says no time. For example, like this point and figure, and then it's a bit difficult, a bit challenging for you to use this Ichimoku. But if you use the Heikin Ashi or use this Renko, I think it's suitable for you to use with the Ichimoku. It is also very good for the swing trade. You can use this combination whereby that Ichimoku and also the Ichimoku and this Heikin Ashi. Even though this Ichimoku Renko, we call it as at glance, or we call it a 10-second technique. See? But a lot of traders, they use or they combine it with other indicators. For example, they combine it with the MACD, and they combine it with sometimes they combine with the ATR, or they combine it with this stochastic and whatever. So actually, is you are free to choose how that you're going to combine this Ichimoku, and also it is not static, it is more dynamic. Okay. So that's all. You have any question? You can. Okay, back to you, Shane.
All right, thank you so much, Tuan, for helping us to understand how do we use Ichimoku, which is not an indicator, but it's a charting method, okay, in our trading. So if you have any questions to ask our speaker today, you may write them in the Q&A box and we'll address them accordingly. I think today I've learned a number of Japanese words. Okay, I think the subject today is quite complicated, and yeah, maybe Tuan, are you able to pull up some live chart to show us how do we use Ichimoku, and maybe with some live case studies?
Can I show you to?
Yeah.
Let's say I share with you. This is IBM KSI. KSI. This is IBM KSI. All right. This is okay. This steady. Okay. This is IBM KSI. Can you see the chart? Okay. All right. Let's see. Do I have the Ichimoku? Okay. Okay. Now this one is better. Okay. So this is Ichimoku. As you notice that this is let's see. Okay. No. This is alternate V. Okay. Notice. All right. This is today. Okay. This is today. This is 26 days ago. And And then this is no, this is not. Sorry, I have to I have to. Wait. Okay, this is 26 ago. Okay, then this is 26 days forward. Okay, like that. So this 26 ago, 26 ago, and this is forward. So if we look at here, that we know that the price or the index now is bearish. Why? Because it's below the cloud. You see, it's below the cloud, and you can see that it's a cloud. And when this happened, is a 26 days ago. So which means that it happened somewhere here, that it happened. It will show you, or they tell you already, that the market is changing, or the trend is changing. So there's a beauty of this Ichimoku Kenkoyu, whereby that they can tell you ahead of the what is going to happen. And you can see here, for example, like here, this is the Chikou also at the bottom. So which means that when the Chikou here is at the below of the price, so which means that it is a bearish. And also you can see that all of this, all the line here is bearish. If you look at here, for example, let's say in here, even though there is a crossover here, you see the Chikou is a crossover here. Of course, when this happened, it is what is happened here. For example, like no, here, all right, here, because this is the real time is somewhere here. This, even though there is signal, the signal here, there is a signal, or we call it is buy signal here, but actually this signal is a weak signal. Why is weak signal? Because the signal happened below the cloud. See, there's a cloud here, it's happened below cloud, and you can see that it is true enough. It didn't go very high, and then they come down. One. Second one is that we use the cloud as a resistance level, and you can see that the price move up, and then it's hit the resistance level, and it start to come down. So that is the beauty of this Ichimoku, that you can tell, they will tell you, or they can, from here we can interpret what is going to happen to the market, and they give you the signal and all that. But of course, remember that this is not this technique is not a money printing machine. Okay? Of course, there is some lagging, because it's lagging. It will have what we call it usually is a bit slow. See? But the most important is that we know how to read it, and the most important when you trade is that your trading setup, which means that what is your entry level, or what is your entry point, what is your betting size, and what is your uh, stop loss level. You see, so most important is stop loss level, that in case that is the price, or the signal is a false signal, or the false breakout, so that you have a buffer, that you lose money that you can afford only. But of course, you see, in the market, by using this technical analysis, using the chart, when we make our decision, when we buy, that we have a calculated risk. So let's say, for example, 10 times you do, perhaps you might wrong in 2 or 3 times only, but the rest of the decision that you make usually is right. Back to you, Shane.
All right. Looking at this chart, right? Zulkifli would like to ask, what is going to happen to KLCI in the next 26 days? Seems like the market is still bearish.
Okay, you see, as a technical analyst, you see, that we don't do the forecast. You see, we are not, we are not something that ahli nujum, or something that we can forecast the future. We just follow only. We are a follower. So based on this, that we know that the FBM KLCI is bearish. So, so is there any indicator is going to be bullish? Not yet. So just wait for the FBM KLCI, or using the Ichimoku, and they will tell us when there is a reversal. As the time being, except today, there is no reversal yet. So we don't have to guess, we don't have to forecast, we just look at the chart and just interpret the chart to say the chart will tell us what is happening now. Because this in technical analysis, what we do is that we want to know is what happened in the past and what is happening now, and based on these two information that we can forecast or we will know what is going to happen in future. Okay? We say what, which means that, for example, in this case, which means that now the price is going down. This is you now. So which means that what's going to happen to future? We believe that it is still going down till it gives you a signal of a reversal. So you have to wait for the reversal.
Okay. So Asha Abidin would like to ask, how accurate are the forward-looking capability of Ichimoku from your years of experience?
Okay, that is a very good question. Because as I said earlier, that this is, you know, the chart just telling you what's happening to the market. You see, so when the price is going down, yes, it is all the way down. And the price is going up, they tell you what is going up, but it didn't tell you when it's going to be the reversal. You see, when the market will give you the signal of reversal, only that they will show the reversal. So how do we know? The purpose here is not to make a forecast. The purpose here is that for us to know if the market reverse already or not. See? So that is where that we can use this cloud. See? When the cloud turns green, so which means that market is already reversed. When the cloud turn red, in this case, actually the color is not important because you can change the color. See, but you must know whether it is a bullish cloud or bearish cloud. See? When the bearish cloud, so we know that it is a bearish. So wait until it changes. So which means that we have to wait the chart to tell us what is happening. Once we know what is happening in the market, only then we make a decisions, which means that only then we decide whether you want to buy or you want to sell, is it based on what the chart tells us. Not that we have to do, we make a forecast or we make a guess, oh, I think tomorrow market is going up. No, we don't do that. We don't do that. See? But based on it, what happening, so which means that based on here, for example, like today, which means that the market is still going down and there is no signal of it going up or is of a reversal yet.
Okay, so the next question is, in which asset classes that Ichimoku are usually most compatible in?
Okay, usually the best asset classes for this Ichimoku is the stocks. So stock is equity. Can it use? But there's a lot of traders, they use this successfully in the forex trading. I've seen that in the forex trading, they use it very successful using this Ichimoku. So basically, it's not necessary that you can say or only can be used in the stock. No, but this technique was tested the past 20 years, which means that before they produce or before they make the announcement or they give to the public in 1968, they use equity. In fact, now also from my experience also, that is it is good for the equity, but it also can be used for the forex. So you can use it for long term and you can use it for also for the short term.
Ilma would like to ask, can it be used on crypto?
I never tried, but if they have a continuous price, yes, I believe it can.
Okay. The next question by Jason is, can we tweak the settings and the parameters of the Ichimoku trading system to suit intraday futures trading like FCPO?
Yes, definitely. Yes, you can. Yes. That's why in earlier slide that I showed you the formula, because you can tweak it. You can tweak the formula to suit your what is your requirement. But from the journals and a lot of that I've read actually all of these traders, even though they trade some other instrument, some of them trade these futures, some of them trade forex, they don't change it. They said this the stock, or we call it the stock setup, or the standard setup, is good enough already. You don't need to tweak. You don't have to tweak. Unlike this, for example, like stochastic, for example, that stochastic you need to tweak, which means that you need to tweak it to work, depend on what kind of instrument that you trade. But for this Ichimoku, you don't have to tweak, or you have to change the formula. You just stock the formula, or the standard formula is good enough for you to trade, or good enough for you to determine where is the market direction.
All right. Yeah. Save our time to experiment with different parameters.
Yes, good. Yes, good.
The,
Yeah, better you. Yes, good to experiment.
the next question is, amongst the Chartist community, how many Ichimoku practitioners are there?
Oh,
Like
I
in
don't have.
terms of percentage, like out of 10 TA practitioner, how many use Ichimoku?
Oh, I don't have the numbers, but I believe it's a lot. You see, because Ichimoku is a trend following. So I would rather say, I mean, perhaps 80% of the 80% of the traders, or 80% of these chartists, they use this trend following system. So one of the system for this trend following is the Ichimoku. So because there are so many technique, you see. Usually when you are novice, or you are just start to learn about the technical analysis, that you use a lot of techniques. But after, once you get used to it, just you have to look, or you have to put anything. Just looking at the naked chart, that you know what is happening to the market already. So after some time, like for a person like myself also, which means that even I just look at naked chart, so that we know what's happening now. And from there we can forecast, or we can make a forecast that what is going to happen. So for example, like this, it's not that we're going to forecast when it's going to happen the next turn, which means that from here, based on the naked chart alone, that we know that the market is still going down. So for example, like for the past couple of days, for the past few days, when the market was moving up, so there are some of my clients asked, is it a reversal? I said no, it is not a reversal yet. Even without looking, or without using any of the indicators, or using Ichimoku, but that we know it is not yet. See, it is not yet. It's not a reversal yet. See, it's still just a retracement before it continue to go down further.
All right. So which time frame is usually more suitable to apply Ichimoku from your experience?
Okay, Ichimoku is good for intraday, and also for the long term, and even for long term, or even medium term. Usually we use the daily chart. So we use daily instead of we use daily chart. So that's usually we use daily chart, because it is what we call, what is it? It is trend following. See, when trend is following is lagging. So when the trend following is lagging, if you use weekly, you see it is more lagged. You see, so it's no point for you to have a lagging, something that is lagging, and you make it more lagged. So I think it is not practical, unless of course you shouldn't compare with the weekly or monthly moving averages, because this monthly moving average, or this weekly moving average, is that this is the how you smoothen it weekly, or smoothen it daily. But this is not this moving average. So actually this is 26 days also, is already lagged. But if you are swing trader, or long-term trader, it's just good enough already. So which means that they only give you the signal when it's already confirmed, you see. Or you can use it for the shorter term also, because it will tell you whether the price or the market now is rising, or bullish, or bearish. It's also the same. For example, like let's say now you want to trade this intraday, for example. The first thing that you have to establish is that whether it is a bullish or bearish. You see, you only can do trade, you can do for long when market is bullish. So using this indicator, or using this Ichimoku, that you know that now, okay, for example, above cloud. Okay, now you see that you know its market is strong. So that is, and you just wait for the signal. When they give you a signal, that's where you execute. And you know where is the target, because all will be here. You see, just at one glance, that you know where is the direction of the market, where is the target, where the support, and the resistance. So that is most important in this Ichimoku.
Okay, you say that the Ichimoku works is a trend following strategy. So so if the chart is not in the trending fashion, like it actually goes sideways, so this trading method Ichimoku may not work very well, right? So I think we can use our trend sideways strategy instead of applying Ichimoku on the chart. Am I right?
Yes, you're right. But also Ichimoku also will tell you that the market is range trading or sideways. For example, like you can see at the top here, that you see that this is where we call it equilibrium and non-equilibrium. If you look at this red line, it is what we call is a Kijun Sen. You see the Kijun Sen is sideways when it's a straight line or it is vertical, and the price move up and down of that line. So which is below, so which means that this equilibrium, when it's across the line is equilibrium, and the top is disequilibrium. So you can see that this is where that you know that is this within the line. And also if you want to trade also can by using this Kijun Sen line. When it's above the Kijun Sen, it start to turn down, which means that there is a short, and when it come down, it's start to move up, is what we call it as the buy signal. Or we can use also as a line. When it cross the line, it's a buy signal. When it cross below or from the top, it's a sell signal. So we can use that also. But of course, when the market is trendless, it is quite challenging for us to make money, because sometimes when the market is trendless, basically the price is not moving. So that is also a problem, especially in the equity.
All right. Tuan Zhe, you mentioned about intraday trading. So would you be able to show us an example? How do we apply Ichimoku on the intraday trading?
Okay. Let's see. I don't know whether you can use the index or not, because you need to, let's see. Okay. All right. Okay. This is this is not a very good example, because this is index, because the index something is usually the movement is a bit slow.
Maybe you can use a stock.
Let's see what stock
Okay.
that we can
Someone
look at.
suggests a Found Pack.
What?
Found Pack. FP Group.
FP group. What was the price? Oh, cannot. The price is too small.
So this chart is not stable.
Oh no, the let's see, do they have the okay, can also,
This is a 30-minute chart, right?
yes, it's 30-minute chart. This 30-minute chart. Okay. Let's say we look at here, for example, let's look at here. This is a 30-minute chart, I think. The first we want to determine is that what is the situation now? Is it bullish or is it bearish? This is the first thing. Okay, now that we know that the price now is a bullish, it's a bullish, so it's a bullish. Okay, so this is bullish because it's the green, and the bullish, when there is a crossover here, turning here, it's not happen here. Basically, it's happened somewhere here. This is talking about somewhere here. It's happened somewhere here. Okay, so now they establish there is a bullish. So next one, where is the buy signal? Okay, of course, different instrument is different instrument is a different way. Usually, if like this, usually we buy, or we buy when the price is above the Tenkan Sen. You break the Tenkan Sen, that is where is our buy signal. But remember that it's just not only the Tenkan Sen, because it must be above the cloud. Just remember, because sometimes it's a bit difficult for you to have the crossover in the short term. You see, for example, in the short term. So you can see, as long as the price move above, and then that is a buy signal. That's a buy signal. And the sell signal, when the thing is that it goes below and it becomes a sell signal. But remember, the first thing you have to remember is that must be above the clouds. One is it come down or below the cloud, or in this case, we see that the price or the Chikou is the price goes inside the cloud. That's it, game over. So which means that you cannot buy anymore until it's above the cloud. So from there, that you know where is your stop loss. You see what is or where is your buy signal and where is your stop loss. You can use, remember that I just mentioned just now, where is your as a stop loss. You can use this Kijun Sen as your stop loss line. So as long as you use this, you can use, for example, let's say here, you break this level. Yes, this is a buy signal, and this is a sell signal. This is a buy signal. It goes up all the way from, in this case, for example, this is a buy signal when you break above the Kijun Sen, and it's moved all the way up, and it is break this, come back down again, and this is a signal, and this is the stop loss in case it goes down. So let's say, for example, in this case, this goes down here, that is where there is your stop loss when you break or is dropped below the Kijun Sen. So because in the intraday, you have to establish your entry point, what is your target, and also the most important, your stop loss. Okay? So by using this Ichimoku, you see that you can just follow, or you know already where is your stop loss. For example, your stop loss is the Kijun Sen line. Okay? What is your signal? The signal will be the Tankan Sen. So it is, you have all this complete system that you can use in the intraday system. Back to you, Shin.
All right. The next question by Ahmad Shami is that, do we set stop loss at Senkou Span B?
Okay. It depends. Let's say it depends. For example, in this case, for example, in here, okay, let's say I put it in the daily lah. Daily is much easier for you to see. Okay, let's say no, this is there any? Okay, let's say we go here, somewhere here. All right. It depends what kind of trader you are. Are you a short term or are you a long term? See, whether you're short term or you're a swing trade, or a swing trade, or you are a long term trader. Okay. The first signal, you see, the first signal is that when the Tenkan Sen cross the Kijun Sen, this is a signal. Usually, you see, usually in the market, you see, the maxim is that you buy slow, you sell fast. Okay? You buy slow, you sell fast. That is a maxim in the market, especially in the equity. What does it mean? It means that we buy once it's only confirmed that the price is uptrend. We sell when we can see the first signal of the weakness in the market. So usually we sell when the price drop from the Tenkan Sen cross the Kijun Sen, like this. This is what we call is. But of course, in this Ichimoku, they consider this one as a weak sell signal, and it's happened inside inside the cloud. We call it as a neutral. And if it's happened outside of this outside of the or bottom below of this below of the cloud, and they are considered as a very strong sell signal. For example, like in here is a cross here. This is very strong sell signal because it happened below the cloud. This one is considered as a weak sell signal. But as I said earlier, in the real trade, we always remember this maxim: we buy slow, we sell fast. So which means that we buy when it's confirmed, we sell when there is a first signal, this is going down. So this is the first signal is going down. Because after all, let's say you are wrong. Let's say after you've sold your shares, say the price turn or is come back again. so you can always buy back, is it? So that is how to use all of this. Yeah, so just remember the cloud, if it's happened at the top of the cloud, it is weak. Inside the cloud is neutral. Below the cloud is strong if it is a sell. If buy, the other way around, or it's opposite.
All right. Now, a moment ago, you combine Heikin Ashi and Ichimoku. And so the question here is, how do you overcome the lagging nature of Heikin Ashi with Ichimoku to determine the entry price, because Heikin Ashi do not show the current price of the market? So this is a question by Jason.
Okay, you see, the main purpose of Heikin Ashi is that to tell you the direction of the market, whether it is average is up, average is bullish, or average is bearish. That is the purpose of Heikin Ashi. So, for example, like in this case, you look at this here, it is average is bullish, and in this case, in here, its average is bearish. Okay, now by using this Heikin Ashi, you see that it gives you a faster signal. Is a faster signal from this straight way they give you. For example, usually in this Ichimoku, we only buy, or we can say it's a strong signal when the crossover happen outside, or the crossover, which means, for example, in this case, okay, I make it bigger. All right, okay, in this case, make it bigger. See, when the price cross above the cloud, this is a buy signal. It is a buy signal. But by using the Ichimoku, you see, using the Heikin Ashi, see, you can even the second candle, you can use it as a buy signal. So which means that you combine the signal of Heikin Ashi and also the Ichimoku. So some people they do that. Some people they don't do that. It's up to you basically whether you want to use that. But if you look at it closely, for example, in this case, in this chart, okay, this is going down. You see, this is down. It's down, which means that in the average, Ichimoku is average. Remember, Ichimoku is average of that daily trade. So now it's down. But if you notice that it is still the Tankan Sen, then Kijun Sen is still above, and there is no crossover. So which means that even though Heikin Ashi show a weakness, but then the Ichimoku that tell you it is still strong. And you notice that the price is still moving up. Okay, you look at it still moving up here. In this case, this is moving all the way until it is going to, it's not crossed yet, didn't cross yet, but still somewhere from here, which means that even though it is going down, but it is still didn't cross yet. But of course, if you look at this counter closely, you look at, this is what we call a behavior, behavior of the counter. That this counter is not consistent, is it? If you are a trader, you should know about this. These are the certain counters that is not consistent. But it's not consistent, which means that, for example, in this, you can see that whenever the price goes up, it's always come down. You see, the goes up, say one day, and then next day is red. So in this rate here, which means that they push up, maybe perhaps in the morning, and then after that close at lower. 2 days down, up, down. So which means that this kind of counter is dangerous, and usually I don't look, this is not my choice. If I look at it, this kind of price structure, even though you can make money, but it's very dangerous. So it's very dangerous because it can drop at any time. Okay? Because the movement is not what we call it. The movement is not consistent. You see, the movement is not consistent. What we want is that it's consistent, which means that even if they buy, which means they buy all the way up. You see, when they sell, which means that they sell all the way down. So that is where we call it as a trend, or this is what we call it is a cycle, so that you can see that is where they can make money. If this kind of transaction, which means that 2 days up and it's down, after that they push down, and then they push up and they push down, they push up, they push down. This is I don't like this kind of counter. It's what if you love this kind of counter, it's up to you. Even though it is up, it is uptrend. Yes, it is uptrend. It's all the indicators show the uptrend, but this is not my liking. Definitely, I don't choose this counter. Thank you.
All right. Thank you so much, Tuan Haji Zainal, for sharing with us the cloud trading strategy named Ichimoku. All right. So if you haven't checked out Bursa Academy, you can go to www.bursaacademy.bursamarketplace.com to find out more about this one-stop e-learning platform that aims to provide you with a continuous and holistic learning journey. So for our next webinar, it is titled 75%胜率股票筛选秘籍. So this title is about the trading strategy to find 75% probability win setup. All right. So it's happening on the 13th of October. It is a morning session. So it's happening in the morning at 10 a.m. to 12 p.m. So it's happening next Thursday, 10 o'clock. If you want to learn, the strategy that our speaker used that produce 75% winning probability, you may join the next session, which will be conducted in Mandarin. All right. I've given you the registration link in the chat box. Yeah, you may register for it if you want to learn this trading strategy sharing. All right. So with that, I want to express my utmost gratitude to Tuan Haji Zainal Arifin for sharing with us trading method Ichimoku. Today we have learned a few lines, okay, and we'll learn cloud trading strategy so that we can use it to trill a trend and make profit in a trending environment. So thank you very much, Tuan.
Thank you to all of you. Thank you very much.
Yeah, so see you guys next Thursday. All right. Bye, everybody. Have a great weekend.